For years, Wall Street treated Bitcoin like a speculative trade, volatile, dangerous, temporary. Something traders gambled on during risk-on cycles before running back to traditional finance. But what if that entire idea is already outdated? Because today, Michael Saylor is no longer talking about Bitcoin as just digital gold. He's talking about Bitcoin becoming the foundation of a completely new financial system. Not just money, not just an asset, an operating system for global capital itself. And according to Saylor, most investors still have no idea what's happening behind the scenes.
The formation of digital credit means that the credit market itself is absorbing all of the organic supply of Bitcoin from now to forever. Our company will probably buy all of the Bitcoin gets produced by the miners between here and the year 2140. Then there's no more Bitcoin.
What macro tailwinds are possible? What about Congress?
Well, I think the passage of the Clarity Act will be a big deal. I think even in the absence of that, the release of guidance that lets you tokenize securities and supports digital assets out of the SEC, the innovation exemption, that would be a big deal as well.
This is where the story changes. Most people still think Bitcoin's only purpose is price appreciation. Buy it, hold it, wait for the next bull run. But Saylor is pushing something much bigger now. He believes Bitcoin can evolve into digital capital, powerful enough to support credit markets, yield products, corporate finance, tokenized assets, even global banking infrastructure. And if that sounds extreme, look at what's already happening. BlackRock now has massive Bitcoin exposure through ETFs. Strategy continues accumulating billions in BTC. Institutions that once mocked Bitcoin are now building financial products around it. That's not speculation anymore. That's infrastructure being built in real time.
Well, you know, Wall Street firms have been creating structured products forever. They take a big stack of S&P securities and they strip the downside. They give you part of the upside. And they sell it to high net worth individuals that would like upside with downside protection. What we've done is taken a capital asset, Bitcoin, and we're converting that capital or those capital gains into credit dividends. So we think Bitcoin's going up more than the S&P index over time. We expect 30%, but it doesn't matter if it's 10 or 20%. We can pay 11.5% dividend on a preferred stock, a credit dividend, because that represents a fraction of the long-term capital gain that we're expecting. And so if you're disciplined about the way that you convert a capital gain into a credit dividend, the capital gain is unrealized, the credit dividend becomes a return of capital and is tax deferred. So digital credit is really synthetic yield, where we're extracting the first 11.5% of our expected capital appreciation of Bitcoin. We're remitting it to the credit investors via an over-collateralized preferred stock. If you've got money you don't need, or you need it in the next 4 years, you either put it in a money market and you get 3.5% taxable, or you put it in digital credit, you get 11.5% tax deferred. So if you're a crypto believer and you have working capital, you want to buy digital credit because you get paid 4 times as much after tax.
The most fascinating part of Saylor's thesis is this. He believes Bitcoin volatility itself can be transformed into yield. That's the idea behind digital credit. Instead of seeing volatility as weakness, Saylor sees it as stored financial energy that can be engineered into entirely new financial instruments. And suddenly, Bitcoin stops looking like a risky tech trade and starts looking like the raw energy source powering a parallel financial system. That's why products tied to Bitcoin yield, digital credit, and tokenized finance are suddenly exploding in interest. Because traditional finance has a massive problem right now. Bond markets are weakening. Real yields are collapsing. Debt levels are spiraling globally. And investors everywhere are desperately searching for return. Now imagine a world where Bitcoin-backed financial products start outperforming traditional money markets, preferred stocks, and even parts of the credit system itself. That's exactly what Wall Street is starting to realize.
The real breakthrough with STRC. It's the biggest preferred stock in the world. It's the fastest growing preferred stock in the world. It's the most liquid.
But it generates 11.5%. You keep the rest if there's a...
The reason it works is because we target $100 and then we use a variable dividend rate in order to keep it at 100, and we attach a shelf registration to it. So if it trades at $100 and a penny, we sell it. And so it has become the lowest volatility credit instrument and the most liquid credit instrument because, in essence, it's a bank account that pays you 11.5% tax deferred. So what we've done is we've created a way for common stock investors to create amplified Bitcoin. MSTR has outperformed Bitcoin over the past 6 years. The common stock absorbs the risk, the volatility, and the upside, and the credit gets the first 11.5%. And so the common stock has a vol of 70, Joe, and the credit has a vol of like 3, and Bitcoin has a vol of 40. So what we're doing is financial engineering, where we strip the upside and the volatility, give it to the common equity investors. That's a rocket. Bitcoin is a fighter jet. Stretch is a passenger jet for people that want a very comfortable ride, but they want to get double, other
What's
credit
the size
instruments.
of this, whatever it is that you're doing right now? How much is
it's gone from $0 to $10.5 billion in 10 months. We sold $2 billion last month. It's growing at a $24 billion a year run rate.
This is where the implications become massive. If Bitcoin evolves beyond an asset and becomes financial infrastructure, then this is no longer just a crypto story. It becomes a direct challenge to the existing financial system, because whoever controls capital, credit, yield, liquidity ultimately controls the flow of money itself. And Saylor's argument is that Bitcoin may become the digital base layer underneath all of it. That's why corporations are paying attention. That's why institutions are moving. That's why Wall Street suddenly sounds very different about Bitcoin compared to just a few years ago. The conversation is quietly shifting from should Bitcoin exist to what happens if Bitcoin becomes foundational to finance itself. And honestly, most retail investors still don't fully see the shift yet.
At the top in October, about 125, I think we bottomed at 60. I think we're moving into the spring phase. We've got decent support here in these levels. I think we'll rally from here. We're just working against a few macro headwinds right now.
And then for your company, what you keep doing this? Is this going to be one of your main vehicles? And how will that benefit strategy? It allows you obviously to keep buying Bitcoin.
If the company has about $65 billion of Bitcoin. If we did nothing, we're just holding $65 billion of Bitcoin. We look like an ETF.
Yeah.
But if I sell the credit and I buy the Bitcoin and Bitcoin appreciates 20% a year, this is screamingly profitable for the common equity, and the company will outperform Bitcoin. And that means if Bitcoin's up maybe 40% in the last 6 years, our company's up close to 60% a year annualized.
There are Bitcoin bears and non-believers that will never be converted, and some of them are pretty smart and pretty wealthy. I don't think they've taken zero off the table for where they think Bitcoin is headed. Have you taken that? Do you think any rational person has taken that off the table at this point? The beanie, the tulip, beanie baby.
There's always going to be skeptics, but there's 900 million people that have a crypto account or they're buying it. And products like STRC are democratizing this because we've got a viral action spreading through retail accounts, through retirees. There are a lot of people that are living on a fixed income, and their view is they don't want to bet their kids' tuition or they don't want to bet their capital on the Bitcoin roller coaster, but they would like to get paid 4 times the money market. And they don't think it's going to zero, right?
Historically, the biggest financial opportunities happen before the majority understands the transformation. The internet, mobile technology, social media, artificial intelligence, and now potentially Bitcoin-based financial infrastructure. That's why this moment matters, because if Saylor is right, Bitcoin's next phase may not simply be about price going higher. It may be about Bitcoin absorbing parts of banking, capital markets, credit systems, treasury infrastructure, global finance itself. And by the time the average investor realizes what's happening, the asymmetric opportunity may already be gone.
Just humor me and say, let's say that all the fears about quantum computing come true. Bitcoin goes to zero. What happens to retirees that have all their money in the 11.5% credit?
When consensus forms about a quantum threat existing, then we will upgrade the entire network in a matter of months.
And
it'll happen as fast as your Apple network, Apple software, and Google software, and JP Morgan software.
Watching all of the tokenization and everything that we're seeing happen, it just sort of bolsters the case that this is not a tulip bulb phenomenon, doesn't it? It's here to stay.
The real power of tokenization is it creates a free market in credit formation and yield for asset owners. And so if you can tokenize a bunch of securities, then you can shop for the best credit terms and the highest yield. And in the 20th century TradFi economy, your bank decides that you just won't get credit, you just won't get yield, and there's not a single thing you can do about it. And so tokenization is a free market in capital, and it creates just a higher velocity and a higher productivity for capital assets.
So people that have have had $1 million target on Bitcoin, you think it's just a matter of time?
Oh, absolutely. Bitcoin's going up forever, Joe.
And if it finally was completely stable and reflected what 121 million, the end result, what would it reach? And I assume it'd just stay there. What price are we talking about? Have you done the math on that?
Well, I think 21 years out, I don't know why it wouldn't be 21 million a coin.
So maybe the real question is no longer, will Bitcoin survive? Maybe the real question now is, what happens if Bitcoin becomes the financial operating system of the digital economy? Because if that transition has already started, Wall Street may have been blindsided again.